This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Thursday, October 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. And we'll be sure to get to it during the show. Overnight markets here, December corn up a half at 434.5. November soybeans are up 15.5 at 1095 3/4. And December Chicago wheat was down 4 at 528 1/4. No export sales announcements here this morning, given the government shutdown. We are through 21 of 23 settlements for the harvest price discovery period for crop insurance. Corn is currently at 421. Soybeans are at 1029. We'll jump right in, guys. It's been a crazy morning. News out of Washington here this morning with President Trump announcing what we'll call a trade truce with China. Certainly contributed to volatility in the bean market here. We're 38 cents off the low roughly in November beans this morning. A couple of highlights. Secretary Bessent came out this morning talking about China agreeing to purchase 12 million metric tons of soybeans from right now through January, with them also agreeing to purchase a minimum of 25 million metric tons annually for the next 3 years. He did reference other Asian nations buying an additional 19 million metric tons of beans. There was no time frame associated with that statement. So I guess let's jump right in, guys. Justin certainly got the markets going this morning. A lot to pare back here, but definitely some good news, I guess, on the bean front to see, at least some guidance, I guess, as we go forward.
Yeah, I mean, there's still gonna be a lot of questions here. I woke up, beans were down 20. Brushed my teeth, came back, they're up 20. So, I think that, there's just gonna be volatility here, because everyone like us, you start crunching numbers, trying to figure out what it all means. 25 million tons. I mean, the big question immediately is, well, first of all, it was just soybeans so far that we've gotten any details on. What other products is it? You go to 25 million tons, that's kind of pre-trade war type numbers on average. I think it's, maybe been as high as 30, low as 20. It kind of back to, call it pre-trade war levels, which is great. I mean, don't get me wrong, but, the big question is going to be, what are you going to do with all the extra beans in the world? South America has grown dramatically in that time frame. Do we think China's going to consume a lot more beans? I don't. Are they just going to artificially buy U.S. beans and then the rest of the world has to go to Brazil? Brazil has the carryout instead of the U.S. That typically hasn't gone over well. So I think there's a lot of questions here. It's certainly a positive trend, positive compared to what it could have been. So we'll see. I mean, we are breaking out of a 15-month range in beans, which we've talked about. Call it, 930 to 1080. And we're, kind of breaking out of that range. So if we close the month above these levels, I think you're probably continue to drive new buying in just because, we've kind of broken out of such a long range and we've got some positive news. I think when you run the numbers, and Dustin has some more on this, 12 million tons through January, could be super friendly in the short run. How much have they bought? Do they have any bought going into this? Do they switch some stuff out of South America? Do we get, it's a lot of questions. I mean, you still need another, what do we figure, Dustin, 22 million tons from what we've already booked, plus the 440 million bushels that they just agreed to hit our government number. Yeah. So it's not like this 12 million tons is coming off of the current carryout. It's, I think, needed to try to hit the government estimate. I think we were at risk of, having a 600-700 million bushel carryout. if we had no Chinese business. So certainly friendly, we'll take it. Just kind of cautiously optimistic. I think I told you guys, I still kind of think what I did before, which is, deals friendly out forward because it brings balance in, and we don't have to worry about, getting rid of beans. Maybe it's a little bit more, we need some bean acres, not just 100 million corn acres every year. So I think it makes the front end of the market friendly, and maybe, the back end of the market friendly, as it looks like, there's more competition for acres. And near term, if, they have to go rush and buy 440 million bushels in a few months, then, it might be tough to be short.
I thought you made a kind of an interesting point too ahead of the show, was like, what if this entices other nations to increase their buying program in, thinking, well, if China comes online, we got to get our hands in there,
Yeah, and I think, you've probably seen that in the corn market to some degree, with Mexico being such an aggressive buyer, and just because I think they needed it. But yeah, you could have had a lot of end users that have been sitting on their hands, knowing that we've got big crops, this, China trade war. If they're fearful that, they're going to rush in and kind of, bull in a China shop it, that they might want to go get some supplies. So maybe they go buy 3 months out. So I think you have to be open-minded here. And I think another reason why having, what we talked about going into this time frame with decade low volatility levels and options, I think this makes options great again. I wouldn't want to be, look at the moves we had overnight, and people are short 13% vol. Good luck. I think guys probably had a bad month or bad year last night trying to trade that. So
yeah. Ben, what's on your mind this morning?
Yeah, I love the volatility. I hope it stays. I think it's a little deeper dive on when you get these kinds of moves. When we're slow and quiet, a lot of the automated trade can kind of hold the market in check, kind of work with it, kind of do their thing. And I'm guessing that, they have some things that shut it down when it starts moving so much. And then you're just left to trading without other traders and the liquidity that they provide when the advantage is to them. So that's kind of fun to see. I agree. I think in the short term here, more volatility. Hopefully we see people reach to buy more beans, and it feels pretty good right now, especially rejecting. I was concerned with closing at the low end of our range on Friday and having a gap down on Sunday night and putting a weekly island in there. But as of right now, it doesn't feel like that's going to happen. A lot of time left, though, the way these things trade. So.
Sure. Dustin, I know you've been beating up the calculator here this morning. Why don't you share a few thoughts on what you've seen just, initially here?
Yeah, no, obviously the market's kind of telling the story overnight. We'll see how the day session goes. We don't really have a lot of beans to sell this year. If they were to ramp up quite fast, I think that the Nov March spread probably makes the most sense overnight, is that they need to secure bushels quickly if they're on a time crunch to get 12 million by January. I actually put up a chart. If Jack, you put that up. This is just U.S. soybean sales to China. So 25 is the number they've committed to for future years. 12 is what they've committed to by January. And so just like a quick number for this year, we have on the September WASDE report, which is the last WASDE report we had 1.685 billion bushels projected for an export sale for total marketing year 2025 beans. And that takes us down to a 300 million bushel carryout, which is quite tight. This is 404 million bushels. That's 12 million metric tons. So
440.
Yeah. So sorry, 440. So you're getting, you're going to end up getting that number to be more real. I think it's not like the last time we had a trade deal announcement, in my opinion, where it was an unreasonable number, $50 billion a year in U.S. ag products. Now we've got this minimum quota. And if you look at this figure, that's kind of like what they were doing, pre-trade war. And Justin, I think you made a good point this morning. Is like, well, what is their demand going to? Was it going to fall anyway because of their population size in the years to come? So I think it does set some sort of minimum, and it's pretty positive out forward. If anything, I would think this is like, again, it kind of relates back to like, well, corn, maybe D25, D26 corn looks underpriced if that's the case, like that. I would think that the bid should be on the back end after you get whatever's going to happen on this Nov March spread. Nov March is obviously doing its thing, I think, for good reason.
Just to add to that, I think we talked about this yesterday before we knew anything, but if there was a deal like this and you artificially make them buy now from us, the basis just moves in South America to try to compete and get the other bushels, right? So, the multinationals, the ABCDs, probably cleaning house on these kinds of things.
Yeah.
I think the business switches from, it's been all beans in Brazil because China's taken every bushel to avoid US, and the safrinha crop hasn't been shipped. So now if it artificially goes the other way really hard, maybe they start a really big corn program out of there, and the ABCDs are just, swapping barge freight and ocean freight, and just making a killing on basis arbitrage is what I think happens.
So talk through what that means on new crop, like rotational wise, like for corn and beans for us, Justin.
Yeah, I don't know. I mean, I think because that business is shifting our way on, we've already got a big corn book on. Mm-hmm. So in the short run, and we're doing this, call it Chinese bean deal. I think that's why I think it's friendly out forward for our, it's called 26 crops. Mm. Beyond that, even that might be too far in the distance to have certainty on. But I think I still look at the big picture of like the pie has grown in beans and corn because South America has expanded so aggressively. So how do you reconcile that? To Dustin's point, I mean, unless China's going to go from 100 million tons, or pick whatever number you think that is, 105 up to 125, and they're just going to say, we're just going to start using 20 million more tons of beans a year. There's still going to be a global problem, I think, with supply. Unless there's, other countries, other Asian countries, I don't even know what that means. So 19 million tons, like, unless somebody else is going to pick up and really start a big demand base in beans, past the short to medium term, I'm not sure it's sustainable. I will say the one thing I told Dustin this morning on the phone that I think is positive versus 1.0 is that instead of just saying $50 billion and then we never really held them accountable, and they kind of just hoped that Trump would lose and then not have to do it, which is what turned out to be true. It's a one-year deal, right? So their tariffs are only going down 10%. I mean, whether you're 47 or 57%, I'm sure it's not very good on their economy.
Right.
So I think the accountability might be factored into this it's a one-year deal. You go hit these things that you're talking about, don't block rare earth metals, we'll lower it 10% on good faith and renegotiate in a year. And I'm sure there's lots of other minutia in there that hasn't been talked about yet. Maybe that is a good accountability thing in there because Trump's still got 3 years, right? So that's a long time for their economy that is struggling. So maybe it does force them to actually, let's take this year by year, and we hope we can make it longer term. So, again, I'm trying to read through all this stuff just like everybody else, but I'm trying to look at positives and negatives and call balls and strikes a little bit here. But I think that could be a positive there on the accountability side.
Yeah, I think the one main takeaway, just like summarize, is this was not excessive, and the market's reaction kind of makes sense. It wasn't like we're up to the limit on some sort of, like the first phase one trade deal was excessive. This is a lot more reasonable. It just holds them to task to buy at least what they were buying before. So unless the rest of the world's going to start adopting a renewable diesel policy, like I also see the same concerns out forward too.
Very good. We got a couple minutes here, Ryland. We got a little pop yesterday after the border meeting, which still, by all accounts, they're going to keep the border closed down south. And then hogs just unable to sustain a rally. They tried early, but what are your thoughts here as we go into the day?
Yeah, no, it was nice seeing a little bit of a rebound here. I mean, I think we did get a little bit reassurance that the border is going to stay closed. Obviously, like this whole response, this liquidation was kind of knee jerk, and I think you just got a little bit more confidence maybe coming into the day that, you know, things aren't as terrible as expected. But on the other hand, like we did see cash markets start to trade a little bit lower here. I mean, we were seeing cash trade at 228, 230, so that's down 8 to 10 on the week. So we'll see if maybe we can start to stabilize things here a little bit today. I think you're going to see a little bit more confidence, especially on the feeder side of the market, just after we know that there's no clear timeline for the border. We're taking it all in stride. Beef prices haven't blinked an eye on this break here. They've been kind of creeping high. Choice up 173, select up 179. So overall, just seems like you got a little bit better news coming into the day on the cattle side. And then on the hogs, cash continues just to drift lower, new lows for the year. And overall, just seems like that's really been the tail here. We're getting a little bit oversold, so wouldn't be surprised to see a recovery bounce, but there just really has been no reprieve in cash. So we're down another 250 yesterday. Kind of expect the market to stay pretty cautious here until we see those numbers start to flatten out.
Very good, Ryland. Appreciate the update. Just came into the open here. We get December corn up a penny at 4.35. November soybeans are up 12 1/4 now at 10.91 3/4 is the last. And December Chicago wheat's down to at 5.30 is the last there. Looking ahead till tomorrow, it'll be Fun Fact Friday, but also you're going to want to tune in. We've got a real special Halloween edition of the War Room on tap, so be sure to tune in. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. We look forward to talking to everybody tomorrow. Have a great day.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.